I know the title of this video may sound a little too exaggerated, and yes, it's true, you have to master risk management and also proper trading psychology in order to become a consistently profitable trader. But what I want to show you in this video is not how to master trading psychology or any of those good stuff to help you in the long term to be a better trader. What I'm about to show you in this video is actually how to start making profits like right away, right after watching this video. So if you're a new trader and you feel like you've learned enough about trading, you've probably started trading on your own, using retail knowledge like supply and demand and certain indicators here and there, and you still feel like those things are not really cutting it for you, then you have come to the right place. So this video is going to be about 9 minutes long, but I hope that you do not have a short TikTok attention span, because this video is going to be very, very beneficial to you if you follow through to the end and apply the same concepts. You should be profitable in no time. So I'm just going to show you with this 3-step process that I've listed here on how to start trading and to start making profits from trading. So the first thing we'll be looking at is what moves the market, what actually causes price to go up or down. That's the first thing we'll be looking at. And also we'll be looking at exactly where to enter for a trade, and then finally where to exit. So that will be your take profit or your stop loss, exactly where to put them. So if you are ready to learn that, make sure to first subscribe to the channel, as it helps us out a lot, and also give this video a like so that more traders like you can also find this video. So there will be a live trading example at the end of the video where we'll be applying all that we are going to learn from this video, and then you see how it works. And after watching this video, if you apply whatever that you learned and it doesn't work, feel free to come back and flame me in the comments. But if it does work, then remember to come back to the comments and then share the good news, share your testimonies, right? So with all that said, now let's get right into the video. So the first thing on the list is liquidity, into brackets what the market is driving to, right? So when we talk of liquidity, another name for that is just money, right? So price in itself moves to where there is big money, right? So just have that in mind. Now this is an example of what price movement would look like on any forex chart, right? Whatever you're trading, this is what price movement would look like. So you usually find that in a bullish market, right, price moves up and then hits a certain level, and then you see that it just goes back down before continuing upward again, right? So this is what we call price moving from external range liquidity to internal range liquidity. So I'll be explaining that as well. So all these things can be found in ICT trading concepts, right? So if you want to know more about it, I just made a new playlist taking you from scratch on everything that you need to learn. I mean, the most important things that I need to learn from ICT concepts. So the link will be in the description if you want to check that out. Now, we've understood that price doesn't just move upward in one straight line. It actually moves. Even though it's going to go up, it goes up, pulls back a little bit, and then continues upward. So there's an impulsive move to the upside, a correction to the downside, and then another impulsive move to continue with the trend. Now let's look at that on the chart. So we'll be using the Bitcoin chart. Now, as you know, the price of Bitcoin has been driving up lately, right? But even though, let me select from here, so you can see this is a clear uptrend, right? Market is just moving upwards, higher highs and higher lows. But then even though price wants to just go up and hit 100k, you find that something keeps drawing price back into the range, or something is drawing price downwards, right? So when you look carefully, you find that even though there is a strong bullish movement, price just comes back down to correct that movement. Those are what we call imbalances in the market. I made a whole video on this just recently, talking about how to use fair value gaps in your trading. So these are imbalances or inefficiencies or fair value gaps. So this is what drives the market back downward into this range before going up. So, and we call that internal range liquidity. So when you look carefully, you find that they are all over on the chart, right? Especially in a strong trendy market, you're going to find these gaps all over, right? So basically these gaps are as a result of orders that have not yet been filled in the market. So price comes back to fill those orders before moving back up. So That is for internal range liquidity. Now, external range liquidity is when price moves above new highs or new lows, right? So in this case, let's just stick to an uptrend. So you find that price breaks this recent high here, breaks above it, and then pulls back or corrects down a little bit, and then breaks above this new high as well. So you can also look at it as a hunt for liquidity, right? What we call sell side liquidity and also buy side liquidity. So let me just briefly explain that. In this market, for instance, it's only logical for someone to try shorting or selling right when price comes back to the level that it got to before selling. So when they set a sell limit at that point, you find that market actually goes above that sell limit and then grabs that liquidity and then sells a little bit or moves down a little bit before moving back up. So that is just the most basic, simple explanation I can give you for that. But always remember, price only does two things, right? Price only moves from external range liquidity to internal range liquidity and then back to external range liquidity. So have that in mind. Now let's look at how to actually enter trades after understanding this. So now that we know that external range liquidity is simply recent highs or lows, and then internal range liquidity is imbalances or fair value gaps, we'll be using this knowledge now to enter a live trade right here, right? So you can see that marked out a higher time frame fair value gap below, right? So that was on the 1 hour chart, and now I've dropped down to the 5 minute chart to take the entry. Now even on the 5 minute chart, once price took out the most recent high, which was external range liquidity, I'm looking to short this market. Where am I shorting it to? You see that my take profit is actually on the center of this fair value gap, right? Because I know that price is surely going to draw back into this internal range liquidity once it has taken out external range liquidity. So now we have looked at where to enter the trade and where to exit, right? So my exit is going to be my take profit, which is right inside the higher time frame fair value gap, and then my stop loss is obviously above that swing high, and then my entry now is going to be on any PDRA on that lower time frame, right, which is my entry time frame. So that could be any of the 7 institutional reference points, like the order block, the fair value gap, mitigation block, rejection block, breakout block, and so on and so forth, right? So I'm going to try and make individual videos on each of these so that you can have a clear understanding of them. But just so you know, fair value gaps are, simply put, the best in most case scenarios. So you find that I've drawn out a 5 minute fair value gap where my entry actually was, right? So the trade was running for just a short while before I recorded this, and you can see that we are already moving down into profits, right? So I'm just going to allow the trade to run, speed run, and then you see how it actually plays out. So as you can tell, this trade actually took a little bit of time, right? Somewhere around 30 to 40 minutes, right, to hit take profit. But it did hit take profit. So I just want to say that just like any other skill, trading requires time, right? So you have to, even with this video, obviously I've showed you everything that you can just implement and then start making profits right away. But to take some practice, right, seeing it happen in the live market. So I would advise that you should first practice this maybe once or twice at least on a demo account before trading this on a live account. I mean, obviously it's going to work, but just so that you have that feel of how it will be on a real live account. So thanks for watching. You did yourself a really great good if you did watch this video up to this point, and I hope that you really get the benefits that you're supposed to get out of this video, right? So make sure to apply the strategies. I don't want to call them strategies, but apply whatever you have learned from this video and you should start seeing profits in no time.